Good morning, everyone, and welcome to the European crossover webinar. And we have seen crude oil come off from an area that I had posted. Someone had asked me over the weekend to my ideas on what I thought crude oil was going. And as far as fundamentals, I said I really don't pay attention to fundamentals anymore. But that looking at the chart, 69.55 was a very key area. Went into detail as to why that was a key area as far as the zone, and that I thought if we did make it up there, that would be the key area to go on and focus on 69.55. It looks like that's exactly where the market ran out of gas. We pulled back. I thought there was still a potential that they might have popped up even higher, but you can see right here where we broke right here against this trend line here. But 69.59, 69.55 has been key, and you can see we've dropped back down. We're actually back to what was a key area previously before was 67.95. So you look at it, we've already faded $1.40 from yesterday's session open. Taking a look at indices, obviously another all-time high we got on Friday. Same thing here with the NASDAQ. Key thing is on the NASDAQ is we did reach our 161% extension. You can see from here. I have those highlighted, makes it a little bit easier. Gold has moved higher, but I think gold is just fool's gold. They would have to move a whole lot higher before you could trick people into getting long again. Obviously, like I said, it messed up some value bears. They would have come in and tried to sell in here and here, but nobody's buying this. I mean, if you look at it from a monthly chart, it looks pretty key hammer and weekly, but you'd have to me, honestly, I think I have to look what I put for the analysis, but I think we'd have to close above 1865 to say, okay, now it's bullish. You see what I'm saying? So you can see here, we came back up to this area here, and we've already started to pull back a little bit, not a whole lot, but I'm just stating is that to me, it looks like they just ran some bears out of town, and but there's nothing that would convince me. You'd have to close above 1865. I think it's 1865. I put in the analysis before I would even think that, okay, now it's bullish. It doesn't mean that it couldn't eventually happen, but it'd have to prove that before you could go on and trick people into getting back long again. We talked about how we thought this was very susceptible back here, although I never thought it would break all the way down here. I thought maybe there'd be a chance for 1740. And at the time, I think our analysis initially outright was we had 1794, and we said a break would take us down to around, I think it was 1774 or 1778. But 1740 was a key level, but never would have thought that all the wheels would come off. So a lot of longs got liquidated. So if you think you're going to go in and drag these longs all the way back in again, you got another thing coming. Like I said, you'd have to move another $40 higher before you could, or actually closer to $50 higher, before you could even get people to get long again in any size. At least that's my thoughts. Take a look at the news. We did have Spanish CPI coming an hour ago. And that came in a little bit better. Now on a month-to-month, it actually came in at 0.4. Then we do have a business and consumer survey for the Eurozone coming out at the top of the hour. We're actually business climate as well as consumer confidence for Eurozone. And then at 8 a.m. Eastern, we have German CPI that'll be out. That always provides a little bit of a move for the euro. And then at 10 a.m. Eastern, in the U.S. data, we do have pending home sales and Dallas manufacturing index at 10:30 Eastern. With that, we're just going to get started with the analysis. I think we may have some European traders that come off their 3-week holiday. So, but once again, we haven't been moving a whole lot. So once again, analysis is going to be rather simple. To me, movement is what dictates analysis. So if we're not moving here, I'm not going to go on and spend a whole paragraph speaking about a move that lasted a few pips or something. So it's just the way it is. Hang on a moment. There we go. So the euro closed Friday's best level in 2 weeks, with taper talk remaining a distant concern. The pair is open to test 1848, which will be resistance. Support will be 1737. And as you know, at the beginning of the week, we kind of set out our initial key ranges at the start for the week. So that's, generally we might have the support resistance a little bit closer. Like I said, starting at the beginning of the week, where could we potentially move to? Those are going to be the areas. 1737 will be support. 1848 will be resistance. And still remains bearish. Let's go and move on into the cable. So cable over the prior week appears to be etching out a bottom. I need to move into the daily to see that more clearly. I don't know why this thing's acting up. So cable over the prior week appears to be etching out the bottom. Immediate resistance for Monday will be 3809, with support at 3728. For the Aussie dollar, so the Aussie closed Friday at a near 2-week highs, opening a potential move to 73.79, which comes in right in here. Initial resistance is going to be 73.32 with support at 72.59. And key 72.59 was in the past. As we dip back, we kind of held there, and then we broke even further, but 72.59 will be that initial support. Are looking for a potential move to 73.79, but at least for today, 73.32 for resistance. And onto the dollar yen. The dollar yen continues to spin its wheels in a restrained range. The pair found offers at the bias chart resistance that we had. You see right here, we've had that for a few days last week, which will remain key. Support to start the week will be 965, followed by 944. And on to the cash dollar index. So the dollar index posted a bearish engulfing bar on Friday. You can see that right here, suggesting a potential move to 92.03 with initial support at 92.32. Resistance will be 93.02. And to me, I go with the bodies. I don't go with the wicks. So that's an engulfing bar for me. Moving on to Bitcoin. And we're looking at the weekly chart here on Bitcoin. Bitcoin posted a doji on the weekly chart, suggesting the market is slowing down from its upside push. Initial support will be 47,500, followed by 46,412. Resistance will be 49,640. So we said 512. Looks like we just went down there. Let's go to the daily. And the low, well, it looks like the low so far is 47,642. So looking for 47,512. Oh, it's 47,500. Not bad. And 49,460 for the resistance. Moving on to the S&Ps. So S&P futures, new week, new all-time highs. Resistance will be 45.25. What can you say? There's nothing to say about this. It's just you just give the levels and that's it. They're just merely markers or guideposts on the road to heaven. It appears to be so. Resistance is 45.45. We're on the way to the sky. And support will be 44.85. It just continues to climb. We're going to move on to the NASDAQ. I just don't know how much further the NASDAQ can push. I mean, we've already reached 161%. They may go in and open up the week and push it up even further. just not sure how much more you can expect out of this. I'm going to stick with this 15,445. Basically, not to say that is the high that it will open up and then that's it and just turns around and falls apart, but that to put things in context. So if we push up to, 15, 500, you can know that, we've already hit two recent 161%. So you have to kind of be a bit cautious here and with the NASDAQ, but we shall see. Doesn't mean it's bearish, but it certainly is extremely stretched. And after hitting these two 161%, you got to wonder how much more. And we actually, the high on Friday was 15, I think it was 15,443. Now we did get above it here in the Sunday session, but look where we're at. We're still here. It's not like we're adding on to it. So I'll stick with that. Downside, I'll stick with that 15,225. Well, let's take a look. There's something closer of relevance. Don't want it to be that close. Yeah, let's go with that. 329. Moving on to gold. Gold returns to the 1820, stopping out value bears. That being said, gold will need to close above 1920 before a true long case can be made. Resistance will be 1865. And the reason this is so far out is because everything else is meaningless up to that point. That's where the true resistance will be. So you can easily run up to 1840 or something. That means nothing. All in between is meaningless. Support will be 1794. So it doesn't mean that this thing is so bullish. No, it just means everything in between is meaningless. And it's not like as if I'm just singing this song now. I was singing this song back in here. And remember, this is the one area right here when we did that webinar, and I spent about 40 minutes talking about gold. Although it had been talking about it before, this was so key. This is right before it broke down. Remember, we've been trading here. We busted out up here towards 1836 or 32, whatever it was. And then look, and I pointed this out, within a 2-hour bar, look at this. We had a bearish engulfing bar, closed down here. The market sat here, and then we broke lower. Remember, we're right here, rose at 1812. We broke down. I think on that day we had 1802 for our support, which it did come down there. It languished. And then I think we had a follow through of 1794. If everything were to come, come down and come apart, we're looking for potentially 1774. Now we talked about 1740, but you can see after we made that big breakdown here, there was just another time that bulls got faked out again. Then the wheels came off, and it came off big time. So that's what I'm saying. Everything up here is meaningless. So yeah, I was wrong. Actually, I put on here 1920 before you can actually say it's a true. This market is a now bull market. You'll have to get to 1865 for the first resistance, because up to here, you can just jump up in here and then turn around and fall apart. Jump up to 1840, fall apart. Jump up to 1848, fall apart. So I'm saying you have to get to 1865. And then support just going to remain the same at 1794. The next one is crude. So crude closed at 2-week highs. Resistance comes in at 69.55. And you can see that's exactly where the market ran out of gas. Followed by 70.24. If it would have been because of Hurricane Ida made it like some extra stops, but we didn't. Support will be 67.95. Where did the market stop? 67.95. So, and then will be followed by 67.11. So 69.55, 67.95. And I think the chart speaks for itself. 69.55. And we see a $1.50 sell-off. And after a $1.50 sell-off, where does this market hold? Essentially, 67.95. So there's a bias chart to start the week. We do have payroll data, and I think there might be some purchasing managers. So those are the ones that are going to really start to move this thing. Until then, we're just obviously crude was a little bit different. We got that extra boost. Also, the volume in the electronic session was relatively light. So that really did open this market for us to go much lower. I shared in those tweets how the volume on Friday was very high, between 67.55 and 67.90, yet the bulls couldn't do anything with it. So, but when you came up in here, there wasn't even that much volume. So it really left the market susceptible for a breakdown. And where are they going to go to? They went straight to 67.95. With that, there's the bias chart. We'll go and get that posted. Thanks for joining us here on the European Crossover webinar.